Hello and welcome to another update video about TRB. I've received again a lot of requests for TRB, but I have to again warn you that this is a coin I consider dangerous, potentially dangerous. The extensions are just huge, and it's kind of, I don't want to say it's unpredictable. I mean, to be honest, it reacted very nicely to our trend reversal area here. Rallied significantly at the time. We had here a target area. It reached the target, got rejected, but this is just not healthy, this pullback, yeah. It's just too deep, too sharp to be really reliable. But then again, I communicated in the last update to you, I support zone, another trading area, trend reversal area, you can call it how you want it. But the idea was that we should see a reaction ideally. I mean, if there is another high, which at least is a possibility in the yellow scenario, okay, there could be one more high. If that's the case, then the reversal should occur in the area between $70 and $118. And because this coin is so dangerous, because this was a huge, you could call blow off top. I mean, it literally crashed. It doesn't look much on the logarithmic chart here, but actually it dropped. Wow. I mean, over 80%, right? Now, from a logarithmic chart point of view, this is literally just the wave 4, which could, to be honest, stretch out quite a bit. It could even form a triangle. Yeah, it could form a so-called running flat pattern. There are many, many options here. But it's also possible that the wave 4 is already over now. The orange box was and is there to look for potential entry points. So for any pullback trader who might be looking for a low risk, high reward entry point, typically these boxes can be used because the market typically reacts to these fib levels. And one, let's say, indication that the wave count is correct is that obviously the market reacted to the fib level. The 38.2 retracement is typically an ideal target for a fourth wave. And just since the top of the box, I mean, the market, from that top of the box, the market already rallied another 40%. So, but just be careful here. I mean, it might make sense whenever you are, when you have a position like that and the market moved already 40%, partial profit taking, never a bad idea. Moving up the stop loss to at least the break-even point, never a bad idea. And then you get basically a risk-free trade and you can just let it run. Chasing green candles when we are dealing with a coin like that, well, only if you're really skilled, I think. Let's say in the yellow count, another high is a reasonable expectation to $750 plus. Yeah, sounds ridiculous, but also here, I mean, it rallied significantly from like $80 to $650. But I have to say, be careful with this one. It's extremely, extremely dangerous. There's no guarantee this is now a fifth wave. The micro count is not reliable, but looking at the bigger picture, it could be wave 5 already, but also the wave 4 could still, without breaking support, just extend sideways a little bit. For example, there are a few options that the wave 4 could take. For example, an Elliott wave triangle, A wave, B wave, C wave, D wave, E wave, like that, and then break out to the upside. Or such a wave 4 can always form a more pronounced ABC structure. At the moment, the structure here is literally not existent. So it could be an A wave. Now we might be working on a B wave and then a C wave down, and the wave 4 will finish somewhere in the box. Below $70, I really haven't got a reliable count left. I would then have to assume that the B wave here topped, and literally we have a 3-wave top, and we are dealing with a situation in which this was an A wave to the downside, this low in May 22. Very, very clear, and you see it. It's a 3-wave move to the upside. Could be a B wave, an overshooting B wave, and the C wave down could happen next. That's the problem. If we get a break below $70, it might probably reset this wave too. And we were just dealing with a running flat or even an expanded flat, but that would be quite ambitious to the downside. I mean, you never know with these coins, you never know. But nice green candle, reacted to the support area. That's where it needed to react. Is now moving. So far, I can tell you that I only have 3 waves to the upside. It's not yet impulsive, but yeah, it's only a 3-wave move. What is support? Micro support. You might ask for what is the micro support level? What is micro support? Well, micro support is a support that I typically add when we have green candles like that. And typically it's the 50% retracement level, and it's a first indication for a break of microstructure. So if we assume this here might turn into an impulse, then a break below the $140 level would lead to a break of structure and would indicate that we might touch again the box. Okay, it's only a first indication, but as long as we only have 3 waves up, and we have only 3, then we can use that level. If we have 5, we have to use the 78.6 fib level. Now, be aware that we've just literally only just reached resistance at $167. A break above that level could lead to further increases. Then the next obvious resistance should be at $235 here. Okay, so yeah, I think this is sort of what we're watching for on the TRB chart. There's a strong spike on the volume profile chart at around $186. Just something to keep in mind. Typically, the market starts to slow down when it approaches these peaks on the VRVP. It just indicates, it's historically a price level that was traded quite often. So you have a lot of historical volume there that typically slows the price down. Yeah, that's my update about TRB. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.